Hello, everyone. Welcome to today's live webinar. So my name's Lucy. I'm one of the group product managers here at FreeAgent. So our group oversees the cash flow tools in FreeAgent. Today, we're going to be talking about a selection of things which will hopefully be really helpful for you in your business. So we're going to talk about why cash flow is so important, how to track your cash flow and manage it, and then I'm going to give you a couple of little bonus tips on how to make sure you get paid quicker to reduce the chance of cash flow problems. Now, you might be wondering why I've got these tasty treats around me, and that's because for the purposes of today's webinar, I am not the group product manager at FreeAgent. I am actually the founder of Choco-Block Premium Chocolate Boutique. So it's a simple shop. We've got we sell chocolate online. So I make my own chocolate, and my revenue comes from sales online. I often sell to big retailers. My main costs are things like ingredients and packaging, the rent for my kitchen premises, and salaries. So I put this here today just to make it a bit more interesting, to bring it to life a little bit. It's quite a simple example, but what I'm about to show you today is suitable for any type of business and for very different types of complexity as well. Okay, so before we get into it, I just want to make sure we're all on the same page in terms of what cash flow is. And it's actually very, very simple. It's literally just the amount of money going in and out of your business and the resulting balance. It's as simple as that. So cash flow forecast is a term you will have heard. This is just basically looking at a future date and saying, given everything I know about what's coming in and what's going out of my business, what balance will I have in, say, 90 days, for example? If I have more money coming in than going out, I have positive cash flow, good times. If I have more money going out than in, then I have negative cash flow. So why is cash flow so important for small businesses? Well, I don't think I'm over egging the pudding when I say cash flow is literally like air for businesses. So there's a bit of research that came out just last month that said that 82% of businesses fail because of cash flow problems. Now, there'll be a big chunk of those businesses that had an excellent product or service, a great team around them, an excellent vision, but it was just the cash flow that was the kind of stinger and the reason why they couldn't pay their bills and they couldn't go ahead. So it can be very important in that sense. The next thing is that if you have employees, these are some of the most important parts of your business, of course. Salaries depend on cash flow. Stating the obvious here, but obviously a really important reason to get your cash flow right. And then last of all here, trust with suppliers. If you're paying your bills late, you might start to lose a little bit of credibility with suppliers, potentially even lose credit rating. So we want to avoid all this. So don't worry, we're going to show you how to manage all this shortly, but that's some of the sort of existential reasons why it's important. Scary stuff aside, there's also some really positive things that cash flow management can help you with. It can really help with growth and decision making. So as a business owner, I'm sure you're constantly making decisions about how to make the most of your business, how to grow your revenue and sales, and it can help you answer a whole number of questions. So it could help you answer questions like, can I buy double stock this week and still pay the salaries in 3 months? So back with my chocolate shop founder hat on, it's Father's Day coming up in June. I know that demand for chocolate goes up in Father's Day, and I want to make sure I've got enough chocolate in stock to meet the demand. But can I buy that extra stock and not put my salaries at risk? Cash flow forecasting can help you with that. Another question, I want you to imagine that a research paper has just come out saying that chocolate is the healthiest food on the planet. I hope that happens. And it's everywhere. It's all over the news. Everyone's talking about it. And more people are buying chocolate. I want to make sure that I've got the marketing out there so everyone knows they can buy their chocolate from me. But how much can I spend on marketing this month and still have enough revenue for my costs later? It can help you with that kind of question. And then, of course, really simple stuff, have I put enough aside for my tax bill? So now I'm going to jump into the demo, which is I know the part that I'm sure you're all very excited about. So let's just jump into FreeAgent. So this is the FreeAgent dashboard, the FreeAgent homepage, if you like. This is your area, all about your business, the overview that we all know and love. And you'll see immediately that actually there is a cash flow tile on this page. Now, it's worth mentioning at this point, there's two types of cash flow tools in FreeAgent. The one that you see here is the simpler version. It's not the one I'm going to talk about today. This is really just the actual amount of money that's gone in and out of your banks historically. So this isn't about forecasting. It's not the thing that will help you with what we just discussed in those slides, but it's looking historically. So I'm not going to go into this one just now. What I am going to do is go up into banking, and I'm going to click on cash flow. And this is where the good stuff starts. So this is your cash flow page. Welcome to your cash flow page. Now, I'm going to talk you through all the different parts of this, so don't worry. But basically, we have what you see here in the chart at the top is what your balance is on any given day of the month. So the incomings minus the outgoings, what's the balance? And what it does in the right-hand corner here is shows you today's balance. At the moment, in my bank accounts, I've got £95,000. In the next 90 days, I've got 197 coming in. And in an outgoing, I've got 182. Balance that all up. And in 90 days, I'm expected to have £110,000 in my bank. Good times. I've got some good amount of cash in my bank, so I'm not going to fall short on my bills. I'm going to talk to you about where all this data comes from very shortly. But first of all, let's just look at the chart and see what it looks like. Because not only can you see what your cash flow is in 90 days, you can also have a look and say that on any given day, what's my cash flow going to look like? So we can see here that on the 20th of July, my projected balance is £96,000, and I've got 2,900 coming in and nothing going out. And we can look at that on any given day of the month. If you go up to the top right-hand corner here, we can view this data, but in a slightly different way. So this is quite a nice chart because it literally just shows month on month incomings versus outgoings. So we can look at this for April. The solid block means that this is actuals. This isn't predictions. This is what actually came in and out. The dashed line, the lined version is the predictions. So we can see in May, because I was preparing for my increased sales in June for Father's Day, I bought a load of extra stock this month so that I could prepare. So my outgoings are higher than my incomings for that month. In June, I'm predicting that I'm going to have a lot of sales for Father's Day. So I've got a nice big green, and I've got a positive cash flow of £36,000 up at the top. July, we're still looking quite strong in sales. And then as we get into August, we can see that actually in the month of August, my outgoings are higher than my incomings. And the reason for that is in September, a lot of the purchases for Christmas chocolate start coming in. So I've bought I'm going to buy a load of stock in August for that. However, even in 90 days, although I'm cash flow negative for August, I can see that actually overall, taking everything into account, I'm still cash flow positive. Again, good times. So let's look at some of the other areas on this page. So right down here, we've got the shortfall prediction. This is really just a summary statistic that just says you're good or you're not good. So we can see here the balance remains above £0. I'm a happy bunny. The next section here is some suggested actions. So I'm going to talk a little bit, before I get into that, about where all the data comes from that makes this cash flow what it is. And it comes from a number of different areas in FreeAgent. So it comes from the balance, the current balance in all of your bank accounts that are in FreeAgent, all of your future dated bank transactions, so things that haven't happened yet but are happening soon, all of your due or overdue bills, invoices, credit notes. So for example, if you've got an invoice due to come in for £5,000 next month, that's included in this prediction here for June. It also includes recurring invoices and bills that are expected to come up in the future, standing orders, if you're with NatWest, if you run your payroll in FreeAgent, your PAYE and national insurance, your VAT, corporation tax liabilities that are coming up. So it pulls in a huge amount of data for you. In addition to that, we also have quite a sophisticated AI algorithm that predicts other costs for you. So this is based on your history. It crunches all your data, knowing you and knowing what you spend and the kind of revenue that you get in. It will make some predictions. And the longer you use FreeAgent, the more accurate that algorithm becomes because it learns from you. There is one other piece of data that goes into this chart, and that is the manual adds of transactions. And this is where you add in hypothetical incomings or outgoings, so you can start to make decisions about what to do in your business. I'm going to come to that soon because it's a really, really valuable tool. I'll go into that in detail a little bit more. But first of all, these suggested actions, what are they about? So essentially, FreeAgent does a huge amount of stuff to bring this data together, but there is an element of kind of onus on yourselves to make sure that data gets kept up to date. And these actions are helping you to keep that data up to date. So the first thing we've got here is pay bills. So I can see that I've got 8 open and overdue bills worth £182,000. Now, what I can do is I can click into here and go through and pay those bills. And that means they'll show in the cash flow, not as predicted, but as actuals, and it'll become more accurate. We can also see here that I've got 39 bank transactions that need approval. So this is where another one of our AI algorithms has guessed the categorization of your bank transactions. And I just need to go in and say, yes, that's right. And then we've also got 19 unexplained transactions here, which I need to just go in and explain. Doing all of this will make my cash flow nice and up to date and as accurate as possible. Now, before I go any further, I just want to talk a little bit about this bank transactions area. And one of the best things you can do in FreeAgent to save yourself time, to make your accounts nice and accurate, is connect your bank feeds. I'm sure most of you have this already, but for anyone who doesn't, I'm just going to spend a quick minute showing you how to do this. So essentially what you do is you go up to banking, you go into your bank accounts, and we can see here that I've got 4 bank accounts. I'm going to go into my business current account for Barclays, and all I need to do is enable bank feed up in the top here. Now, as you can see, we've got a whole number of banks. We have feeds with most of the big banks in the UK, including the neobanks. So you can see a big selection here. You can search for further banks here. And once you connect that, it means that all your transactions are pulled into FreeAgent at least once a day. So that saves you from having to go to your bank, download the transactions into an Excel, format it all, re-upload it into FreeAgent, and do that on a regular basis. The bank feed will do all that automatically for you, so it saves you a lot of time. Alrighty, so let's go back to our beloved cash flow. So that's the actions. Now, the last section I want to show you on this page is these incomings and outgoings at the bottom. And what these do is they essentially just give you a bit more detail about what's actually made up of all the incoming and outgoing costs that go into that cash flow. So let's look at these one by one. Now, I can see here that I've got an invoice due from Walker Forbes. They bought a huge amount of chocolate from me they spent £1,890. But I can see here that this is 13 days overdue. So I really need to chase them for that payment so that I can improve my cash flow. So what I can do here is I can go into this. I can create a quick send template to chase them, give them a reminder just to let them know that their payment's actually overdue. Going back to the cash flow page, I've also got this other invoice, Twin Food Stores. Now I'm looking at this. This is overdue 1 year ago, and I happen to know that that invoice is actually, it's wiped, it's no longer valid for certain reasons. So what I can do, so that means it's inaccurate. I don't want that showing in my cash flow. So what I can do is I can hide this. And what you'll see is that once I've removed that, it's changed the balance up here and just made it that little bit more accurate. We can see here also that this has now got a crossed out eye icon to show that it's hidden. And there's a few other icons here just to explain a little bit more about each transaction. Looking at the outgoings, here we've now got stock. So I bought a bunch of stock from Madstacks. And I've just realized it's overdue 5 days. So that's poor show for me. I really need to pay that. So what I can do is go in, pay that bill. And again, that'll make my accounts nice and accurate. I've got a few other things here for electricity, some wine I bought for a chocolate tasting evening. So you can see here the different costs going out. Now, one of the really cool things here is that you can add manual events or manual transactions. And this is great because what it can do for you as a small business and say, right, if I spent this money today, will I still be able to have enough money in 2 months? Or if I had this amount of revenue coming in. So if we say, I want to predict, so I'm putting in a guess that I think because Father's Day is coming up, I think I'm going to get an extra £40,000 in revenue that month. Okay, I'm going to put this in as Father's Day revenue. This is what I predict. I want to see what this looks like in my cash flow. So I'm adding that manual event. I can see here that my predicted balance in 90 days has gone up. However, to do that, I need to buy extra stock. So I'm going to put in a predicted outgoing of 20,000. Again, that then takes my balance down. Now, worst case scenario, what happened if actually I've made a mistake and Father's Day doesn't mean that chocolate stocks are going to go up? So I want to look at actually, let's take away this revenue. Imagine if I didn't get any revenue, but still bought the stock. I can hide that and I can look up here. So this is just a bit of a sort of, loose example of the kind of planning and decision making you can do in FreeAgent cash flow. Okay, so that's really everything on the cash flow page. What I want to do now is just give you a couple of tips and tricks on how you can reduce the chances of having cash flow problems. And to do this, we're going to go into invoicing. So we go to work and we go to invoicing. Now, there's two really good things here that you can do when you create a new invoice in FreeAgent. So we can, I'm not going to go too much into the invoice here because there's actually another webinar coming up last month that's focused purely on getting paid quickly. So keep an eye out for that coming in June 2024. But what you can see here is that we have the contact of the invoice date, the payment terms, etc. So you'd fill that in. Now, this is the important point that I want to show you here, is the payment section. And what you can do is you can enable digital payment processors, the use of digital payments on your invoices. So if you tick this box, and as long as you make sure the link settings are on the theme settings in invoice, when you send an invoice, it will look like this. And not only will it have your bank details where the customer can pay via bank transfer, it will also have an option here where your customer can pay online. Now, we've probably all been in that situation where you've received an invoice from someone, you're on your mobile, you're out and about, getting a cup of tea, doing whatever you do in your daily life. You get an invoice. Now, you want to just pay it straight away so you don't have to think about it. But you've got to go in the invoice, memorize the sort code, go to your banking app, put in the sort code, go back to your invoice, memorize the account number, go back. So it's not a hugely smooth experience for customers. And what people will do is they'll just put it off. They'll pay it later. And that means you're not getting paid as quickly. However, with this online payment option, you can click into this and you literally just, if you're on your phone, click through the same page. You're putting in your own card details, which are probably auto-filled because your phone's remembered them. And it just makes the whole thing a lot easier for users. So I think that's probably most of the things I wanted to chat to you about today. Now, I don't know about you, but now all I can think about is chocolate. So I'm going down to the shop to buy myself a nice big fat bar of chocolate. And I hope you do the same. I hope you have a great day. I really hope you enjoyed that. And thank you again so much for joining.